Markets didn't move this week because of earnings or inflation. They moved because geopolitics just turned into tariffs. Is the EU-US Greenland standoff, Iran controversy, a live risk of catalyst across stocks and crypto? Find out on this video. Welcome back, everyone, to this midweek session. Covering off a couple of highlights. Let's look at some of the macro environment we are in right now. The market is still trying to balance whether we're in a cooling inflation situation, but we've just gone into a bit of a fresh trade war and with a bit of a policy uncertainty as well, with all the tariff timeline and escalation risk. Now, inflation, at least in Europe, we've got some reasonable news that it came out about 2.0 in December, but underlying pressures like wages still remain a bit of a watch item. Liquidity, when it comes to the central banks, look, there is still a lot of uncertainty there because tariff threats, retaliation talk, and what comes next definitely tends to tighten the financial conditions before any policy changes occur. So lastly, the risk sentiment, we're definitely at a bit of a mixed aspect right now because we're leaning a bit risk off in Europe. Equities are down, safe haven bids, the gold Swiss franc strength is definitely being discussed in market coverage right now. Let's have a look at some news events that can give us a little bit more guidance over here. First things on everyone's mind, the Greenland and tariffs as leverage. We both know that Trump has reiterated his desire for US to gain the ownership on Greenland. And at the same time, the European allies are kind of countering that thought. We've had basically tariff threats given from each side, which is causing a shake in the market massively. So be on the alert for that particular news event and look out because that might be causing some more events. But tariffs are starting Feb 1 if we cannot come to an agreement. So that might actually have a bit of a financial impact on the markets. Next up, we have our Japanese bond market. Now, the yields are increasing while value is decreasing. And generally speaking, Japan only has two options over here. Either they tighten their monetary policy and reduce the global liquidity, or they do nothing while currency and bond market implode. Honestly, neither options are great for tech-heavy US equity markets. So you can definitely see how that's affecting the narrative in the last couple of hours in the market. Another event we've got currently happening is the impacts and the geopolitical issues with Iran and obviously Trump's side, because about 2 weeks ago, Trump did say that he is going to interfere if innocent lives are at stake. And obviously, America is waiting on a response on that. But what's happening in Iran is we have no certainty due to their outages, but it's definitely causing a toll on people. And while that's in discussion, people don't know where the markets are going. So they definitely have a little bit of fear as to how the world and especially the stock market is going to react to that. And lastly, to cover off all this geopolitical stress, we can just see gold is having an absolute tear over here. It's ripping into all-time highs. And what that generally tells us is that when people go towards gold, they're looking for a store of value. And that generally means that people are not willing to take on a risk on appetite right now, and they're still wanting to take their options in safe assets such as gold. Even silver is hitting all-time highs. Now, my personal bias in all of this is if something is hitting an all-time high, it's probably not a decent opportunity to put a long-term investment perspective into this and probably just see the trend out. And personally speaking, from some of the strength indicators that I'm seeing, I don't think I think this rally might continue, but is it gonna consistently keep rallying for this much power throughout the long term? I'm a little bit uncertain on it. But I will let Steven speak a little bit more on that a bit later. But if you're wondering why people are confused or emotional right now, because initially a couple of weeks back, everything in the macro looked manageable. We had Venezuelan oil coming into the US markets, and we thought that this was going to go all very well. And then all of a sudden, we are having these tariffs placed by different countries and all these different events of war that are coming out. So people aren't very certain, and that kind of uncertainty is definitely causing a stress in the markets. Over to you, Steve.
All right, fantastic. Thanks for that, Yash. But what I'll do is I'll actually start off in relation to your initial comment there in relation to gold. Now, it was a very, very interesting comment that you just did actually make there as well in terms of the all-time highs, and I'll take over that conversation there as well. And one of my favorite indicators called the on-balance volume. Now, on-balance volume is basically just taking a look at increases in volume in the upward direction minus the decreases in volume that actually occur on a daily basis. And it's a very simple indicator in that way, but a very powerful indicator as well. What you want to see is actually increases in the on-balance volume as you actually have increases in the actual unit price itself.
Wow.
Well, you want to be seeing higher highs and higher lows as the price actually increases. That's the general rule of thumb. Now, as you were saying, you're actually a little bit skeptical in relation to whether or not this trend may actually be increasing. In a way, taking a look at the on-balance volume, I'm starting to get a little bit skeptical myself as well too, because you'd be wanting to see higher highs and higher lows all of the way through. As you can see, we're actually starting to see lower highs starting to form through.
Mm,
I'd be wanting to see continual higher highs coming through as well as higher lows starting to form again on the on-balance volume before I start getting a little bit more convinced that this trend is going to continue in terms of gold. It is still a very strong uptrend, don't get me wrong, in relation to the way gold is actually going, but could be weakening. Not saying
mm,
not saying the trend is completely gone yet, but it could be starting to weaken there. If we take a look over at silver, still higher highs, still higher lows. So there doesn't look like
mm.
there's anything changing there. An extremely strong trend that's going on overall there, and that really has not ceased at all ever since November. You can
Agreed.
see that all the way through. So yeah, totally agreed with you in relation to that overall. Let's have a look at the SPY. The SPY overall fell 2% overnight. The media ramping it up and basically saying, oh, the worst day ever since April. Incorrect. We actually have had a bad day. It's probably been the worst day since October. Okay. So if you've been hearing the outlets saying since April, absolutely incorrect overall there. It's been October. One of the guys on Bloomberg was actually correct in terms of saying October, and well done for him actually getting it right when all the headlines were actually incorrect. But overall, the SPY really has had its boots knocked out of it overnight and overall there. Is this a major problem? Okay, well, perhaps not 100% yet. Remember how on the weekend I was basically saying that if the lagging indicator crosses over the Tenkan-sen being the blue as well as the baseline,
Mm,
generally indicates that we could be potentially going into the downward direction. That's more than likely if that's the case there. It hasn't hit below the baseline as yet. So
okay.
we've got a bit of a warning sign, but not 100% of a terrible warning sign as yet. On top of that as well, we're not trading below the cloud.
Hmm.
So overall, okay, warning signs, keep an eye on what's going on here, but not terrible totally 100% as yet. Very similar to the situation in terms of the Qs, although the Qs have started to penetrate beneath the cloud. So a little bit more detrimental in relation to what's going on there. Although we still haven't gone below the baseline on that one yet there either. So this is
Hmm.
where the Ichimoku clouds can really tell you quite a lot of information. Heading across to Bitcoin, really, really major decline actually occurring in Bitcoin there. As you can see overnight, 4.5% decline. So quite a major decline there in Bitcoin overall there. That lagging indicator nearly penetrated beneath the price area as well, but didn't decline beneath the Tenkan-sen. So still not so bad. More than likely, probably going to get a bit of a rebound, especially coming off that cloud area overall there. But as you can see, we've actually really retracted back away from that top end of that cloud, which we were talking about potentially going through in terms of a positive aspect there. So we've really got some major resistance kind of aspects coming along here, and that lagging indicators come back through that resistance area. So it's really, really starting to struggle overall there. We're basically
Mm,
back in between these areas here, sandwiched in a range.
mm.
Ethereum, okay, take a look at that one there. Now that's really, really back into a dog breakfast situation overall there as well.
Mm.
Okay, that's coming back down below some prior resistance areas there, below prior support areas there, and that's actually now below the cloud overall there. So there's some real struggles going on.
It's
It's
very interesting because quickly the market narrative has changed to go risk off due to these recent events, and you can just see how people have pushed it below the Ichimoku cloud.
Yeah, absolutely. And on top of that as well, now we're actually below psychological
Mm,
barriers there as well, below 3,000. And that really does draw people's attention away from this as well too. The same with Bitcoin as well, now below that psychological barrier of 90,000. So
mm,
it's really knocking people away in terms of things there. The European markets as well, if we want to go through them pretty briefly as well there too.
mm,
There's been a little bit of divergence going on there as well too. The
mm,
Fed is the European Stoxx ETF. Okay, that got knocked around a fair bit as well overnight. So overall, that went down around about 2%. That's actually starting to struggle against that baseline that we're actually talking about with the Ichimoku, but obviously hasn't actually penetrated beneath that area there. The EWU, which is the United Kingdom one, not as badly affected. Okay.
mm,
Now that's an interesting divergence that's going on down there. So that one only went down around about 1% on a comparative basis. The German DAX down almost 2%. But the one that
mm,
really got affected the most was actually the French. Okay. It may not look so bad in terms of being down 1.6% on a comparative basis or relative strength basis. But when you take a look in terms of the way the indicators are looking, that actually penetrated quite a lot more in terms of the price area. On the
mm.
chart itself, it actually looks uglier than a lot of the other areas there. But the one major divergence that you really did see more than anything else was not actually the Dow. The Dow is actually still fairly high, fairly much affected, much like everything else. But the other one that was really divergent was this, in terms of the Russell
Wow.
1000. Okay, and I don't think many people really saw this, but this was the small caps
Mm,
actually performed fairly well. Okay, it still was down for the day, and down in terms of down 1.2%. But take a look at that on a relative basis compared to everything else.
mm.
Okay, fairly well in terms of everything overall. So
Definitely from a Wall Street perspective, they're still wanting to hold on the risk on assessment and
mm,
proceed to hold their positions over there, seems relatively.
correct. So this is something to really keep into consideration as to what's going on overall. There's a few different parameters that are going on. It's a little bit too early to call in terms of any momentum that's coming through overall. But in terms of, say, like if you're conservative, like we mentioned over the weekend, you want to be taking a look in terms of whether or not you might be seeing anything that's different amongst it all. So if you're conservative, you want to be seeing, okay, well, what's going on in terms of if there's any differences between those particular sectors or not, and then saying, okay, are we having any confirmation that's going on? If there's a
Mm,
confirmation, then acting upon that confirmation once you've got it. Now, as you can see, there was some differences there in terms of the small caps compared to, say, the large caps. So the Russell 2000 may have some components that you might be interested in compared to, say, the S&P 500 or the tech laden Nasdaq. So having a look at those aspects there might be a little bit more interesting compared to any of those large cap aspects. For the aggressive aspects, you now have something to act upon more than anything else in terms of, say, the breakdown that's going on in the Nasdaq. If you wanted to be shorting something, obviously not advice, but it's a matter of saying, taking a look at something on a comparative basis. If you wanted to go something long, perhaps having a look more in terms of the Russell for anything else that might be strength, in terms of relative strength compared to the relative weakness. Of course, if you're looking at something long term, well, then the biggest thing is having a look at your own investments, seeing if anything in there has changed in terms of your initial plan, and then acting upon that if that's the case. But that's pretty much about all there. And I'll head back over to you, mate.
Well, look, the beginning of this week definitely was a reminder that markets just don't trade economics, they trade geopolitics. And geopolitics can turn into tariffs fast. So, any traders that were in massive positions, I think they would have learned their lessons. But as always, this isn't financial advice. It's how we think about the markets.
Hmm.
We'll see you next time.